Ladies and gentlemen, good evening. I welcome you all to the Q4 and FY24 post-earnings conference call of All E Technologies Ltd. Today on the call from the management, we have with us Dr. Ajay Mia, Managing Director, Mr. Rajiv Tyagi, Executive Director, Ms. Ritu Sood, Executive Director, Mr. Sandeep Jain, Chief Financial Officer, and Mr. Sandeep Salman, Head Cloud and Managed Services. As a disclaimer, I would like to inform all of you that this call may contain forward-looking statements which may involve risk and uncertainty. Also, a reminder that this call is being recorded. I would now request the management to quickly run us through the presentation for Q4 and FY24, giving us a brief on the performance highlights for the quarter and the year that went by, the growth plans and vision for the coming year, post which we will open the floor for Q&A. Over to you, sir.
Thank you very much, Vinay. Good afternoon, everyone from India. It's always a pleasure to come and meet you once in a quarter, go over what we have done, what we are doing, and look forward to the interaction today. Let me just put up the presentation that we have made. You can see my slides?
Yes, sir, we can see it.
Okay, very good. Okay, so let me quickly go through the first couple of slides. So this being the first call of the new financial year, we have slightly changed the sequence. We are going to go back and start talking and giving an overview about what All E Tech does, since there have been a number of new investors who were added during the year. So I was suggested that it'll be a good thing to go over what we do. Of course, we'll talk about the numbers, we'll talk about what has not changed, and then the standard annexures. So what does All E Tech do? We enable enterprises to do more with digital transformation. And what does that mean? With advent of digital technologies, a lot has changed in the manner businesses are conducting themselves when interacting with their customers and other businesses. So one of the most important things that we do, we enable these businesses to modernize their digital core. That means enabling them on the cloud. It could mean bringing in automation of various processes, modernization of their applications, bringing collaboration tools, and then enabling the platform which will enable them to capture their data so that it can be used for data engineering and AI. Having done that, the other, and which I think is one of the largest parts of our operations, is we enable these organizations on their enterprise applications. ERP, CRM, human capital management, commerce applications. We implement them and we tailor them to specific industries and then to the specific organizations. In the process, we also study these organizations and help them with their process optimizations. This could mean identifying bottlenecks. It could mean bringing in various efficiencies. How does it reduce cost for the organization, and redesigning the workflows. So process optimization becomes an integral part when you do enterprise applications and when you are doing even your digital core modernization. And while we are doing all this, systems have to work together. So system integration becomes a key part. So these could be your internal systems, or these could be third-party systems, which you may be using from cloud, for example. So integrating these disparate systems and new technologies, and of course, you need the right IT architecture for it and ensure that the data flow is seamless within the organization. And with all of this data getting accumulated, Then you have to work to engineer with that data, use it for machine learning, use it for forecasting, predictions, and then various forms of AI. And when any organization goes through so much, there is need to enable the users consume the system. This requires change management. And we work with the management of the organizations to help with the change management process. It means training the users. It means helping them identify and work there in their new roles. It may mean working in different ways when it comes to collaborations. So these 6 things broadly define what All E Tech does. So perhaps, the easiest way for anyone to understand what we do would be to kind of think of us as an Accenture for the mid-sized organizations. And when we do this, here are the industries that we do this typically for. We were asked in the last some calls that how much do we do in which industry. So this time we have brought in, the split. As you would see, the professional services industry and manufacturing are the largest. And then so are food and beverages, EPC, trade and distribution, and some of these others are also amongst the most visible industries that we work with. And how do we do it? Yes, our solutions continue to be based on the Microsoft's technology stack. At the base remains the identity, security management, compliance. Microsoft Azure sits on top of it, and then you have the Microsoft Power Platform, and then you have the Microsoft 365, Dynamics 365, and all the solutions and services for data and AI. The next slide is a blow up of what Dynamics 365 is because it's massive. And these are the various things that our customers ask for and we need, and we provide them solutions based on these. There are some other technologies that we use. For example, in some cases, when the best of breed application is non-Microsoft, we do not hesitate. We will go out and use that as well. But most of the work is still based on the Microsoft tools and technologies. So we decided that we'll give you a couple of examples this time of how have some of our customers used us and benefited from our engagement. So this case study 1 is the case of a cosmetics wholesaler distributor. As you can see in the map, this is from the US. It's a leading wholesale distributor of cosmetics, and they needed to modernize their inventory management and order fulfillment. So in the engagement, we moved them to the cloud, and it became a cloud-first approach for every business operation that they are doing. It also included intelligent process automation. So by the way, intelligent process automation basically is the original RPA plus AI. So that's what now is called the intelligent process automation. We have gone ahead and done several enterprise applications for them. They have been the ERP with Business Central, pieces of CRM at the moment with sales. We have enabled automation with Power Platform, at least one, the warehouse management solution, which is our IP. We have also done, it was an in-depth analysis and consultation process with which we did their process optimization. So now they can do their live inventory. Their salespeople in the field are now able to see their inventory live. And it needed not just technology adoption, it also needed change in the way they were doing their business. And now they can reserve inventory against some orders. And some of these things may feel like ordinary, but when you're looking at a business who has not been doing it, it requires a lot of change management to bring a business to a point where some of these things become a part of the organization. And then we are now helping them with data engineering and pieces of AI. And of course, there is a lot of system integration that has happened in the process. The case study 2 it's a large global financial services consulting firm. We worked with their Africa operations and these 5 countries, 14 entities in these 5 countries. And again, cloud adoption, apps modernization, the enterprise applications of ERP and CRM. In this case, we also had the SharePoint application to be integrated, built and integrated for them. We helped them in optimizing several processes. And this meant sales cycle, client onboarding process, contract management, and then, of course, the system integration with all these systems being working together, and now also working with them on BI. So as you would see, most of these things require a consulting-led approach. And that's why our customers choose us. Here's the case study 3. We have done it for the India operation. It's a global private equity investment firm. We helped them in their digital core modernization through cloud adoption, app modernization. In this case, also the app and device security was needed. The enterprise applications, again, ERP and CRM, but we also had to do for them some other app development work, which was more in terms of some organization portals that had to be built for them. The process optimization in this case meant consolidation of various businesses and regions, cost allocations, fund and deal management, expense management, the integration of various applications, and then the data and AI. So these case studies would give you an idea of what All E Tech does, which is, actually going beyond how one typically thinks of an IT organization in India. An overview of the business application provider since 2023 years, roughly, we are about 360 people, and glad to say that 30% of the workforce is women. And they are represented in this call by Ritu, who's a member of the board and has been with the company now for almost 20 years. We were, again, certified as a great place to work. We have done in excess of 900 implementations, close to 1,000 now, multiple times awarded with Microsoft's Inner Circle and other awards, multiple country operations. I think this slide is something that you have seen before. Naturally, over a period of time, we have been awarded with different awards from Microsoft and various other accomplishments. I don't need to go through this, I guess. So what are the growth drivers? What do we think of the business going forward? I think our strongest growth driver is the comprehensiveness of our offerings. Our customers don't come to us for one thing. Our customers come to us because the adoption of digital is very challenging. And we become a one-stop for all their digital transformation needs. We help them with their core modernization. We help them with their enterprise applications, be it ERP, CRM, human capital, or commerce. We work with them for their data and AI solutions, system integration, consulting services. So it's a journey. And this comprehensiveness of our offerings makes us the most attractive for them. We base most of our offerings on Microsoft Stack. And as you know, the Microsoft business and Microsoft brand image and the value proposition that Microsoft has been providing to customers has only been strengthening in the last several years. And it will continue to do so in the foreseeable future. It's becoming an AI-first organization, and we are bringing the same things to our customers. Our international focus is very important to us. This enables us to reach to more customers. This also enables us to improve our profitability, and we are going to continue our investments there. Our IP-led solutions make us attractive for businesses when we reach them in our sales and pre-sales period. And this focus will also continue. And then we continue to work on our inorganic growth initiatives. The SWOT analysis is something that we had spoken of before, but the strength for us is we have a significant customer base. Over these 2 decades, with various industry solutions and IP experiences across various countries, the deep competence that we have now in the business applications suite of solutions, and the strong alignment with Microsoft, give us, I would say, a huge advantage, when compared to other providers in the market. And in this area, we have been in a leadership position. Our weakness, well, this is something that we know that we have been working on. So we want to take our industry solutions to the market, and weakness does not mean that we haven't made progress on it. We have. We continue to do that, particularly in the US and African market. We have had several customers now take our industry solutions sometimes as a framework, sometimes as a part of our overall solutions. But that's what enables us to get to more customers in these regions. And we are continuing to work on that. We also need to increase the strength of our consulting and salespeople on the field. And that's an area that we are increasing our investments in. Yes, the increasing cost of talent will continue to be a threat. We continue to now add more people to the organization, both laterally and through campus. We had added a batch. We spoke of it in the last quarter. This year again, we will add another batch from the campus and keep on selectively hiring laterally from the organization. The opportunities, of course, is the digital transformation momentum. The strong Microsoft growth in the space, and Microsoft is growing faster than the market. The infusion of artificial intelligence by Microsoft in all product lines, and of course, India's emergence as a global economic power are strong drivers to our business. Let's look at the numbers, and I guess many of you would have already seen this. In the quarter 4, our income from operations was 30.4 crores. The total revenue stood at 32.38. We had a net profit margin of 17% in Q4. Repeat plus recurring in Q4 was 79%. We added 11 new customers. If you look at the complete financial year 24, the total revenue, the income from operations was 116.3. The total revenue was 123 crores. As you would recall, we had set ourselves a target of 25% Y-on-Y. We have been able to exceed that by a certain margin. Our net profit margin has now improved to 15.9%. This means an operational revenue growth Y-on-Y of 32.7%. Repeat plus recurring revenue was 88%. And during the year, we added 56 new customers. Our team size currently stands at 360 people. In terms of ratios, the operational revenue growth quarterly went up 28%. Annual was 32.7%. And the EBITDA growth in the quarter was 69.5, over the year 71.5. The EBITDA growth was 70.5% for the year. The net profit Y-on-Y grew 69.8%, which means 15.9% of net profit margin for the year. Our domestic services revenue was 35.2% for the year, and the US was 45.8%, Africa 9%, APAC 6.6%, and Europe 3.4%. These are the charts just for a visual representation of the numbers that we spoke of just now. As we had just mentioned, we added 11 new customers. 5 of them were domestic and 6 international during the quarter. And during the year, we had 34 new domestic customers and 22 new international customers. These are the numbers that represent the top 5 and top 10 that you have. And I think the most notable thing is that our reliance on the top 5 or the top 10 customers is not that much. In fact, if you look at overall year, our reliance has also come down as compared to last year. A view of how Microsoft has been doing. So the intelligent cloud business for Microsoft has grown by 21% as per the results of Q3 for them. The Azure Plus business grew by 31%, and the Dynamics 365 by 23%. And these numbers and these growths are faster than their competition in the market. Operational updates from our side. So what we have been experiencing is that our net new customer acquisition in US has improved this year, and particularly in the recent months. What that means is that I would say until last year, most of the customers that we used to acquire in these regions would be companies who would have decided on the Microsoft Business Applications product at some point in time, but would move to us for, I would say, better service, efficiency, cost optimization. But this year, particularly in the last couple of months, we have started adding several net new customers, which means customers who are at a stage where they are trying to understand whether they should buy a product A, B, or C. Now that requires a consulting engagement and telling them that how would a certain product line help them in meeting their business challenges. So these net new customer add has increasingly started making us more attractive to the Microsoft field salespeople in the US. And as a result of that, we are now deciding to increase our investments on the sales and pre-sale side in this region. Increasingly, more number of customers have been showing interest in exploring the IPA, the co-pilots, and the data engineering. And this is all a result of how much change AI, particularly Gen AI, has been bringing to the businesses. And we are currently doing these engagements with some of our customers. Our M&A activities continue to take attention from us, and we are currently in conversation with one data engineering company. What has not changed, the board of directors you're familiar, other than maybe some pictures changing on this slide, and the lead management stays the same. And then you have these standard annexures, which you probably would have seen by now. And this is a slide on where we invested as our CSR. So let me close this, stop presenting here, and open up for conversation.
Thank you, sir. All those who wish to ask a question may use the option of raise hand. In case there's a problem at your end, you can also drop a message on the chat. Anybody who wishes to ask a question, please raise your hand. If you're unable to raise hand, you can unmute and ask your question. We'll take the first question from Varun Agarwal. Varun, you can go ahead.
Congratulations for the consistent performance this year.
Thank you, Varun.
I would just like to get some update on the inorganic acquisition part.
Well, I think the updates are like 0 or 1. Rest of all is WIP. So as I said, at the moment, so if you recall, in the last year, not last year, well, in the last quarter, we had mentioned that we are talking to one company in the dynamic space as well. This was a company based in India. And at one point in time, this company then felt that their numbers in this year are going to be better than what they are last year. So we mutually agreed to postpone our discussions or further discussions till end of the year, because they wanted to leverage the growth that they felt that they are going to have in the business. But this activity continued, and in the process, we would have probably met and evaluated at least a dozen other companies. And the one company that I'm talking of is a company that we have had several conversations with. We are not at a point where we would say that we are close to a term sheet, but several conversations have happened, and they will continue to happen, till we decide one way or the other.
So this will be reevaluated post the June quarter? Post end of...
The Dynamics company that we had on our slide last time, they wanted to revisit it end of the year, which is end of the year of their business, which is December. So they thought that this year was going to be significantly better for them. And we had a little bit of, I would say, not so sure. And because, being better means, different valuation numbers, different multiples. So we jointly decided to hold that conversation off for a couple of months and revisit it end of the year to see how much have they progressed and what do the appropriate multiples look like.
So we'll be in
the conversation for the current company are currently progressing.
Okay. And how are the developments seen in the US and Canada markets?
Well, we are very encouraged with what we have seen in the last, I would say, couple of months. We have had some really good acquisitions, and these is, as I said, this is where we are now competing there with the likes of maybe an SAP or Oracle or Infor, which is we have started doing there what we have been doing in India. So compete bottoms up. Go there, look at their various initiatives that they require in digital transformation. And if you recall my very first slide, we look at everything. What do we need to do for their digital core modernization? What do we need to do there for their enterprise application? And enterprise application is not one thing. It's not just ERP. I mean, if you look at ERP itself, it's many things. It's sale, purchase, financial accounting, it is manufacturing, it is distribution. And then you go on and look at their CRM processes, be it sales, be it customer service or marketing or field service. And then you go on and look at various pieces of automation that they need to do. And then the whole data engineering side. So it's a journey. Once we get there, we kind of stay there. And that's what has resulted in us having a very healthy number of active customers. I think our total number of active customers now is in excess of 250. Now, that does not mean that every customer will continue to make the same level of investment with us through the year. They will not, because their own investment, they initially make some investment, then they need to consume, what has come in there. It takes time before they move on to the next initiative. But because our service offerings and our touch point to their businesses are so many, that the relationship continues and we continue to bring, new business with them, with time.
So these new deal wins which we get in US and Canada, compared to the Indian business, we have better margins in that?
We do, absolutely. Well, not on the product side, because product costs the same, in India and in the US, barring maybe a little bit of, currency exchange difference. But from a services point of view, absolutely.
Okay. Thank you and all the best.
Thank you very much, Varunji.
Thanks, Varun. We'll take the next question from the line of Agam Shah. Agam, you can go ahead, please.
Congrats on a good set of numbers. So, quick data keeping question. I see in a balance sheet, short-term loans and advances have gone up from 54 lakhs to 10 crores. So, can you just tell me what is this figure of 10 crores? Hello?
Sandeep? Yeah, I'm just asking. Yes, Sandeep?
Short-term loans, I need to get into the details. It's basically advances given to our subsidiaries.
Okay, to your Indian subsidiaries, right?
Yes, yes.
Sir, in terms of, can you talk briefly also in terms of your broader outlook in next 2 to 3 years? Where are we seeing now the company? We have crossed the 100 crores mark in terms of revenue. So what is now the roadmap in next 3 years vision and a bit a longer time frame I'm saying? Can you talk on that?
Sure. Well, internally, we are going to keep pushing the pedal, and we expect that we will continue to grow in the range of 20 to 25%. And this year also we thought we will do 25%. We did a little bit more. So that's one part of it. So organically, that's the number that we are looking at. It could become better. And in addition to that, there will be these inorganic additions which will add to our overall growth. So we see the next 3 to 5 years, we should be running a substantial, revenue and a substantial business in different geographies. So being in different geographies, of course, helps us in a manner that even if there are fluctuations or market conditions changing from region to another region, we remain largely, I would say, or let me say, less affected by any of those changes. The area of work, by the way, that we are in, I mean, this is time for this area of work. Anything related to digital transformation is an urgency for businesses. All of us are seeing how the way AI and data engineering practices are growing. These will impact all businesses, and these businesses will require help from organizations like ourselves to tide over and stay competitive.
So just continuing your last point. So can we not accelerate our growth and maybe grow more than 25%?
Well, we could. The
Base
thing is
also
that
small.
well, the thing is that we potentially could, and see, it's like this: as your base grows, your ability to grow further also increases. If I look at if this year we added let's say 25 crores or so to our top line, it might have taken us many years to reach the first 25 crores.
Correct.
So yes, but the thing is that you also have to put targets which don't just look I would say theoretical. So you have to see that, okay, this is the minimum that we want to push and do, but that does not mean that by forecasting a number or by taking some target we go to sleep. We anyway keep pushing with all our might, and time will tell us. Sometimes we will do better and sometimes we may falter, but the thing is that we will keep going on.
Okay, that's it from my side.
Thank you very much.
Thanks, Agam. We'll take the next question from Paras Chera. Paras, you can go ahead, please.
Thank you. Congratulations, Dr. Ajay. It's been really phenomenal performance and quite steady actually. Now,
Thank you very much.
I'm just trying to understand, the margins I see, operating margins have improved a little bit even in this quarter. Do we see this, this kind of a level like close to 19-20% getting stable and possibly sustaining going forward?
See, it will, as I was just mentioning a short while back, as the percentage of our international services business increases, these margins will improve. And you have to see that it's not just one factor. On the other side, in order for us to improve our margins internationally, we would also have to recruit more people in these regions, which means more salaries. So there are more than one parameters which play a role in it, but absolutely our expectation is that if we are going to look at our margin in 3 to 5 years time, they will be in the range that you're mentioning.
Right. And I mean, just, extending the same question that the previous participant asked you, I mean, I do reckon that, you'll have sort of some target like, 20-25% revenue growth every year kind of thing. But like, is there a vision for a certain revenue number over the next 3 to 5 years? Like, let's, for example, put like a, 300 crore or close to some number, that vision that you're working with?
Yeah, absolutely. Yeah, absolutely. I mean, some of this is more like in some sense, something that may not happen in 2 years, 3 years, but something that will probably happen in a time frame of 5 to 10 years, but as an organization and as management team, we all have spoken of targeting, reaching 1,000 crore in revenue, both organically plus inorganically, in a period of maybe 8 years, 9 years, could be 7 years, 6 years. Time will tell, how some of these things move. But we have spoken and, agreed internally that that's the North Star at the moment that we are looking at.
Right. And in terms of acquisition, like you said, there is a discussion that is going on. Other than that, at the moment, there is really nothing much on the table for now.
Well, the thing is that, I may have 5 other companies, who I am looking at, but unless I've had like at least 5 conversations with somebody, there's no point in bringing that up here.
Right.
We don't have to give data just for the sake of data. You see, it's election time and everybody talks of numbers, but for
Yeah.
us, it's not election, right? So we.
No, congratulations once again, and thank you so much for the time that you gave
Thank
us.
you very much.
Thank you. We'll take the next question from Tushar Vasuja. Tushar, you can go ahead, please.
Thank you, sir. So, sir, I'm a bit new to your company. So, can you please explain me how pricing works in your industry? Like, what are the factors that can affect your margins?
Tushar, you would need to repeat, please. I missed your first few words.
Sure, sir, no problem. So, I'm a bit new to your company. So, can you please explain to me how pricing works in your industry? Like, what are the factors that can affect your margins?
Yes, absolutely. So let's look at what is it that we provide to a customer. When we provide a solution to a customer, it has, I would say, broadly 3 components. There's an initial consulting piece involved in the overall engagement, and then there is a solution involved. The solution has 2 components. There's a product. The product also has 2 components. There's a Microsoft piece of the product, and then there is our IP. And then there are implementation services, which will be followed by support services till the customer starts a new initiative. So the consulting piece is all ours. Now, depending on where the customer is, and I have mentioned in some of our previous calls, when we work in India, our margins on services are typically in the range of 22 to 25%. But when you are working with customers, let's say in the United States, our margins are in the range of 50 to 55% on the services. So which means the implementation services and our support or maintenance services. When it comes to product, the margins are roughly the same. And sometimes a little bit low in India because, sometimes you have to do some discounting and so on. But still, I would say our margins on the product stay somewhere in the range of 16 to 18%, even some 19% sometimes. So that's how it works.
Okay, sir. Thank you. And my next question is regarding, you also mentioned in your answer, IP-led solutions. I did not understand that quite a bit. So can you please explain a bit more about that?
Absolutely. Absolutely. So when you talk of these enterprise applications, for example, these applications are to be used by a business and they will be useful for this business only when they capture the specificity of the domain. So if you look at an ERP, this ERP is used by all types of industries. Whether somebody is doing manufacturing or providing services or travel or e-commerce, everybody may be using the same ERP. But now for this ERP to be usable by this company, it will have to be tailored for that industry and then customized for that specific organization. So the same product, which is, for example, being used by a travel company, be it a Make My Trip or a Yatra or a Travel Guru, is also the same product which will be used by a manufacturing company. So in order to do that, we tailor the product, and sometimes we tailor it to a point where we create an IP out of it, and then it becomes available on the Microsoft cloud for the customers. So if you look at it as an example, our travel vertical solution is our IP. Our IP means that we have in it years of domain knowledge and experience and pieces of solutions that we have built after having worked with dozens of customers in the travel sector. So that is our IP. And we typically go and charge the customers a certain fee for it.
Okay, sir. And I'm assuming the margins for this would be more than the regular business.
Oh, yeah, absolutely. I mean, whatever we get from the IP is all for us. Of course, we have to keep investing in building these products and keeping the solutions updated. They are.
Okay, sir. And so my last question. So like, I'm trying to understand what's the market size for this industry, domestic and US?
So it clearly runs into high double-digit billions of dollars. If you look at the Microsoft numbers, Microsoft just on the business application side, last year they did more than 5 billion. Now, if you add to it the Azure side, it's significantly bigger. For every dollar that is spent with Microsoft on the product, overall, the customer ends up spending at least 5. So if you combine everything, this overall market size is somewhere in excess of $50 billion.
Okay, sir. And how is the industry growing? Like,
so obviously our industry, so, I just presented a slide where you have seen that how Microsoft in its areas has been growing faster than the market. But when you ask about ultimately these solutions get deployed for customers who are working in their specific industries. Now, those specific industries would have variations based on what's happening to that industry. For example, when COVID struck, the travel industry came to a standstill and nothing was happening in that industry. Well, after the initial setback, however, the large travel companies thought that this was a great time for them to revamp their systems, something that they had deferred for a long time. So after the initial setback, and once everybody knew that, there is visibility of how the world is going to come out of the pandemic, while their businesses were not growing at that time, they started investing in revamping their system. But at the same time, certain other industries were doing far better. So when you talk of industry, it varies industry to industry. Some industries at some point in time do better than some others. And how have the industries been for us in the last year? I presented it in the slide on our industry spread. We
thank
have
you, sir.
seen
That's very
the
helpful.
professional services was the highest chunk, followed by manufacturing and others that I have mentioned there. Does that answer your question?
Yes, sir. That definitely answers my question. Thank you very much.
Thank you.
Yeah,
Imran,
hi.
you want to
We'll
go
take the
next?
next question from Imran Khan. Imran, you
Yes,
can go ahead,
Imran.
please.
Thanks. Good afternoon, gentlemen. I have a couple of questions. Number one is on the revenues that you report. So I was just curious if you can split the revenues maybe broadly in discretionary spends by the customers and then non-discretionary.
And give me an example. What would you call, and not that I can't answer it, but just to bring clarity to my
Well,
solution.
sir, I'm also trying
What
to
would you call discretionary? What would you call discretionary and what would you call non-discretionary?
So there might be certain projects which are very, very critical for a company, without which a company
Sure.
not
Let me answer your question. Sure,
Yeah.
let me answer your question. See, ironically, and fortunately, I would say, the solutions that we provide, God forbid, if the solution stops working, the customer's business stops.
Right.
So our solutions are mission critical. The ERP needs to work all the time. The CRM needs to work all the time. Well, the only thing that one would say is that if, let's say, a certain piece of data engineering doesn't work for some time, the business is not going to stop. But then the business needs that data for their decision making. But it's not discretionary. Nobody in business wants to spend anything discretionary. Unless it is bringing a return on the investment, nobody is going to spend $1, right? So it's not discretionary. The discretionary thing would be, if a business thinks that they are doing fine and they don't need to do anything more for the next several years, and they want to stand still, they will see the world around them moving faster than they are moving. And in the process, they would go down. The option to stand still doesn't exist in this world. You will either keep moving forward or you will decline. Either you will take that decision or the world around you will take that decision for you. But
Right.
nobody has a discretionary spend. They spend only when they think that the spend is going to give them a return on that investment.
Right. The other question I have is, on the risks on the business side. So if you could just highlight maybe some of the risks that you may face, or may impact your growth going forward. Just trying to understand that.
Well, at the moment, I cannot think what could retard our growth going forward. I mean, for example, if there was another pandemic, okay, there could be temporary setback where the world is taken aback and doesn't know how to react. But you see, most of the IT industry actually grew faster during the pandemic than it was growing before. The world during the pandemic learned how to work remotely and how to work with partners in different parts of the world, and we gained from it. So from that point of view, I would say one of the risks that we have identified in our SWOT slide is that the cost of people, keeps going up, and you always have to be careful about that. So that's one part of it. The other part of it is that, the other is that if we are sloppy, if we don't do our job, then, anyways, anything can happen.
And no risk from the macroeconomic point of view, nothing?
Well,
Especially-
the risk to us would be no different from the risks to most other businesses, I would say. But I would say the technology business has invariably done better. Even in adverse situations, as I was saying, and just to repeat, how we saw the reaction of the world during pandemic. After the initial setback, the technology business started moving faster than it was moving before.
Right.
And it is basically to mitigate, any unforeseen situations that we have chosen to be in different parts of the world. So we have businesses in the Americas, which is US and Canada, and then we have Africa and several countries in Africa, the Asia Pacific, we have customers in the Middle East. So our geographic spread, gives us some level of insulation from any local turbulence.
Got it, sir. Thank you.
Thank you.
Thanks, Imran. Before we go to the next participant, I have a question on chat since he's unable to raise his hand. Bhavesh Bhatia, you can go ahead and unmute yourself and ask your question.
Thank you. Hi, sir. Good to see you.
Hi, Bhavesh.
Congratulations on a great set of numbers. You have, if I compare All E with the other micro cap and small cap companies, you have grown at a very good rate and consistently performed quarter on quarter basis. So good performance from the company and management. And my first question would be with regards to your revenue. So you have done a revenue of 116 crores. And out of that, I wanted a split of annuity-based revenue and a fixed revenue. Do you have that number currently?
Yes, I mentioned it in my slide. Our repeat plus recurring revenue for the year has been 88%.
Okay. Gotcha. And what about the attrition rate?
The attrition rate during the quarter was 7%, and during the entire year, it stood at 16%.
16%, 16.
16, yes.
Okay. That's it, sir.
And that, by the way, would also include some people who had to be let go for performance reasons. So that's all put together. This also includes some people who might have left within the first few months, of their joining. So this is a complete number.
So in the last quarter, you had some 350 headcount. Now you have increased it to 360. Am I right?
That's correct. That's correct, because some people who were I would say not confirmed, they got confirmed over this period of time. Some people who were in training positions were confirmed at this period of time. So the number is now around 360.
Okay, great. So you have cash and cash balances of 115 crores. So how do you plan to utilize that, like in acquisition, any bonus issue or any other purposes you can?
So top of our mind, of course, is acquisitions. Inorganic growth is certainly going to be the biggest application of those funds. But even otherwise, as I mentioned, during the presentation, that we are increasing our investment in some of the international geographies. So getting people in, for example, to work in the US, we have also added some sales strength in India geography. So we are going to use some of that money for those initial investments, which will give us dividends then in the times to come.
Great. That's it, sir. All the best to you and your
Thank you very
management
much,
team.
Bhavesh.
We have another participant in chat, Shashank Rastogi. You can unmute and ask your question.
Yeah, hello, sir.
Hi, Shashank.
Congratulations on a very good set of number.
Thank you, Shashank.
Sir, what is your revenue and EBITDA guidance for the current fiscal year?
Revenue and EBITDA for the fiscal year that has gone by, I assume.
No,
The
sir.
revenue was
For this financial year, what are your plans for the
the
revenue and
forecast,
EBITDA?
you're saying. Okay, you're saying
Yeah,
forecast for this year.
absolutely,
So as I said, internally, we have taken targets to grow by about 25%. It could be a couple of percentage points, higher or lower, but that's what we take as internal targets.
Okay. So, sir, is it will be with the organic growth, or you are keeping in mind the inorganic growth part as well?
No, these numbers are organic. Inorganic, whenever it happens, will be on top of it.
Okay. Thank you, sir. Great performance. Thank you so much.
Thank you very much.
Thank you. We'll take the next question from the line of Mihir Shah. Mihir, you can go ahead, please.
Hello. So I have two questions.
Yes, Mihir.
Is this the growth sustainable, and if yes, till what size of turnover? Would you be able to keep growing at this rate?
Well, that's what we aspire to do. Okay. Now, that does not mean that we will always keep doing the same things to get the same result. And obviously, as the number grows, getting that percentage growth, becomes increasingly harder. We are very much cognizant of that. But we will see how we have to do different sets of things. Because, I gave you what our North Star is. And we may have to take different measures to get there. On the way, we might have maybe a rough patch somewhere, but that does not mean that it will change the position of the North Star.
Okay. So my next question is, do you plan to stick to Microsoft, or are there other platforms or capabilities being explored as well?
Well, we are not stuck to Microsoft, first of all, even now. Microsoft is certainly the platform that we use most often, simply because for most of the things that we do, it is the best platform right now. If you want to look at enterprise applications for mid and upper mid-market sectors, Dynamics 365 is a great platform. If you want to look at the cloud, Azure is one of the best platforms. It's growing faster than the market. If you want to look at the low-code, no-code platform, then the Power Platform is better than most other platforms. So the issue is not whether we are selling Microsoft or we are selling Oracle or SAP. We are not selling any of those solutions. We are in the business of helping our customers go through their digital transformation. To do that, we have to use some tools and technologies. We base our solutions currently, the solutions for which the Microsoft products are the best, on the Microsoft stack. For some other things, we have also used in the past and will use in future some other technology and some other solutions as well.
Okay, sir. Thank you.
Thank you.
We'll take the next question. We'll take the follow-up question from Tushar Vasuja. Please go ahead.
Yes, I had a few follow-up questions.
Yes, Tushar.
So when you were explaining to me earlier, you said that you are present right from consultancy stage to implementation stage. I just want to know if you also do maintenance for the products and solutions that you provide.
Of course. You see, we have customers who have been with us for 10 years, 15 years, or even more. Now, the life cycle of a customer always is that initial consulting to have a roadmap for them, that what should they do over the following 3, 6, 12 months and beyond. So a customer may say, let me take the case of, the first case study that we had here, which was, a cosmetics wholesaler in the US. And when we went there, they had issues with their basic operating systems. And we went ahead and we optimized some of their processes and then brought in an ERP and got them, using that ERP, which needed, many things to be done in terms of be it their procurement process, be it their financial accounting process, be it their sales and other things. And as that happened, they said, hey, we have some of these things which we need to get automated. And we started with them the activities of the intelligent process automation. And then the ERP piece that we had done has gone into maintenance. So our customer relationships are always long-term. They, through their journey with us, undertake many initiatives, and every initiative, or let me say most initiatives, after the initial implementation go into support and maintenance phase. But in addition to that, there is one other important offering that we have, and that's the offering of managed services. And my colleague Sandeep Salman, who's also on the call, he heads the cloud and managed services piece of the business, where we provide these managed services for various different workloads that we cloud enable for our customers. And his team provides these services 24/7 to customers, not just in India, but many other parts of the world.
Okay, sir. Would it be possible to quantify the revenue contribution from maintenance?
Well, it would be hard for me to quantify from maintenance only. But broadly speaking, if you just look at our overall services, so as I said, from the overall revenue that we have, about 88% is repeat and recurring. If you take out the product piece out of it, most of the remaining would be, maintenance, if you may. But you see, maintenance is not the same way as most people might think of maintenance. An enhancement is a piece of maintenance, and doing an upgrade is a piece of maintenance. Bringing in a new hotfix is a piece of maintenance. Supporting your users or new users with trainings and clarifications is a piece of maintenance. So maintenance here is not like the maintenance of a car or a refrigerator in your house.
Okay,
for us, maintenance is making sure that your customers keep consuming the product and solution that you have provided to them.
That's wonderful, sir. I just had one last question.
Yes.
In your IP, there's a mention of professional services and revenue contribution. I'm sorry, but it's a quite broad term. So can you explain what it really entails, professional services?
Absolutely. So organizations which are working for other businesses by providing some services. So let's say all IT companies are professional services organizations, right? A firm of lawyers would be a professional services organization, right? So any organization which is not providing products, but is providing services is a professional services organization.
Okay, sir. Thank you.
Thank you.
Thanks, Tushar. That was the last question for the day. So do you want to give any closing comments?
Well, thank you very much. I appreciate all of you, coming and joining us today in the sweltering heat that parts of India has currently. But we are glad that our business momentum continues. We have had a reasonable year behind us, and we are continuing to increasing our investments. Some of these investments for some period of time, and because we come and report quarter by quarter, may appear like impacting our margins, but you have to make those investments to keep growing further, and we would continue to do that.
Right. Thank you so much. Thank you to all the participants for joining on the call, and thank you to the entire management team for being present on the call. That brings us to the end of the conference call. You may all disconnect now. Thank you, sir.
Thank you very much.
Yeah.